Can you see the screen?
Yes, sir.
Yes.
Yes,
Okay.
sir.
Yeah, this is very interesting. So I know that we have, already done a lot of, figure crunching and all. So now this is the last leg of our lecture. So what I have chosen, top five companies, okay, in terms of market cap. Not, of course, Reliance and TCS supposed to be the biggest in market cap, but I've just randomly chosen five companies which are having a market cap, a very good market cap. If you look at the market cap, Asian Paint is, having a 3 lakh market cap, and ITC is having 4 lakh 28,000 crores as market cap. All these numbers are basically coming from the screener. Okay, I'll just take you to the screener. So this is the screener basically. For example, if I go to ITC, so you'll find the ITC numbers here. Okay, in terms of market cap, which is currently 4,23,000, but my figures are a bit older. So maybe, the market cap has gone up a bit after that or remained the same or got a little less. I don't know. I think it has gone down in terms of ITC. Anyway, so this sort of analysis you can do it for your own fun. It's not part of the project. I mean, you can just do it for yourself. So I've chosen Asian Paints, ITC, Sun Pharma, and if you find all the companies are having market caps above 1,85,000 crore, then I've mentioned against each company what industry they belong to. Okay, so this is paint. ITC is an FMCG company, Sun Pharma is a pharmaceutical, and Larsen Tubro is a conglomerate present into many businesses. Maruti Suzuki is in automobile, and Ultratech is in cement. Are you able to see the screen?
Yes, sir.
Yes, sir.
Then what kind of business they are doing. Now again, this all figures and everything I've picked up from Screener. If you go to Screener again, you will find the data with regard to what industry they belong and what kind of business they're doing. Okay, for example, Asian Paint is in decorative paintings, okay, coatings, where they give most of the businesses coming from the retail segment. Almost they paint houses and buildings of NRI. I mean, of course, of the retail people of the retail this thing segment. And ITC is majorly in cigarette and hotels and many other companies, many other businesses. Sun Pharma is the largest pharmaceutical company in India, we all know, and Larsen Tubro mainly in construction of various projects like metros and the highways and everything. And Maruti is basically a market leader in passenger vehicle segment, and Ultratech is a cement company and making cement related products. And these are the market caps, and this is the enterprise value. So if we go to the enterprise column, I'll just show you I'll share the slides also to you. And first I'll do is that I'll do it later. Okay. So market cap plus debt. I've taken the book debt because it's sometimes difficult to get the market value of the debt. So I've just assumed the debt, which is the reported in the figure of Asian Paints. Okay, like suppose if I have to go to Asian Paints, I'll just go to Asian Paints here. Okay, go to Asian Paints. Fine. So these are the numbers which are given. So even the enterprise value is given here because I have added this into my ratio table, and you can also do it. So enterprise value is basically how much? How much is enterprise value? Anybody can just read it somewhere. Enterprise value is here, 3 crore 4 lakhs.
So 3,04,327 crores.
Crores. Okay. Now what I have done, the figures is populated itself, but you can arrive your own figure, which will be exactly matching with this number. Okay. There will be some difference because the figures have been on two different occasions. The dates are different. Okay. So let's go back to this thing. So here it is coming 3 crore 6 lakhs. Okay. So you take the debt from where you get is basically you go to the balance sheet of the company. Okay. And look at the borrowings number. Okay, which is 1866, which is the last quarter reported number. Okay, the last number which was reported in September. So these are yearly figures, and they have reported their performance up to September. So they said that they have a figure of 1,866 crores of debt. So what I have done, I have just taken the number here. Okay, so 1,086. So because debt has not changed, only the market cap is changing because the market value of the shares keep changing. And the cash. Now cash is also coming from the balance sheet. Okay, So if you go to, down below here and look at other assets, okay, so it will tell you the cash equivalents. So cash is 833. Okay, so this is cash. So which I have, put the number here in my Excel sheet. So all the numbers are coming from here. So we get an enterprise value. So if you do this calculation today and take the market cap as on today, let's take uh, the market cap of Asian Paint as of today. It is 3 crore 3 lakh 294. So I'll just put this number. So just remember this number. It's 303,294. I'm going to just put that number here, just to understand whether I'm getting the same number here. So how much is that? 303,294. Okay. So if I do this calculation, the enterprise value comes to 3 crore 4 lakh 327 crores. And if you just try to match here, which has been done, by them, basically they have given this number. So it is 3 crore 4 lakh 327, exactly matching, isn't it? So what is the formula for calculating the enterprise value, and what does it mean actually to you? Can anybody tell me what is enterprise value? What is the formula?
So the current market cap plus the current debt of the company plus current cash and cash equivalents.
Minus cash, minus cash.
Minus cash.
And that will give you the enterprise value.
Yes.
Okay. Of course, you have to do an adjustment. If it is a consolidated balance sheet, then you have to even reduce the minority value of the shareholders. Okay. Fine. So we have not gone into the minority value. Okay. So it is 3 crore 4 lakhs, which is exactly matching with the screener. Maybe there is no minority value because it's a standalone company. Okay. Fine. So enterprise value. So what does enterprise value means to you? What's the significance of enterprise value? What's the meaning? What does it tell you, basically? In one word, can you explain what is enterprise value? Anyone? So basically, the enterprise value is roughly the total market value of all the assets the company owns. Because all the money which the company has got in terms of capital, debt, they have invested into buildings, plant, machinery. So this is the market value of all their operating assets of the company. Okay, fine. So what is the enterprise value? It is the value of all the operating assets, roughly operating value of all the operating assets the company owns. It's the operating assets. So that's why we have reduced cash, because cash is not an operating asset. It is lying in some form of cash or cash equivalents, which the company has invested into something else, not into the business. So these are the assets which are generating revenue for the company. These are the assets which the company uses for they're making their sales. Okay, fine. So if you look at Asian Paints sales numbers, for example, so you'll find the sales number here. So what I've done, I've just picked up the number from I've gone to screener and went up to the profit loss account and just copied, pasted and everything. Just highlight this and copy and paste here. So here. So you will get the numbers here. Okay. So what I'll do, I'll paste it. I'm not pasting because the numbers will change, because some numbers have changed at the end. So I'm not doing that. Okay. So then you have the sales growth every year. How much the sales is growing. Okay. So that number also you can just calculate. So basically it's a formula. If you can look at the formula here. So it is basically this minus this divided by 7,400. Okay, if you can look at the formula here. Are you seeing the formula on your screen? So it is,
Yes, sir.
there is a 25% growth in sales from 7,400 to 9,200. So there is a 25% growth in the sales of the company from the year 2011 to 2012. So similarly, I have done same everywhere. Okay. Fine. Suppose you want to calculate what is the sales growth of the company, over the period, at what rate the sales are growing. So you just put a cursor here and go to the formulas, go to, I'm going to the recently used and go to, the rate formula and put the numbers. Okay. Suppose the numbers are, for example, the number here is coming to be, 12 years. Okay. like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and 13. Okay, fine. So 13 years. So that means, this growth will be for 12 years. Okay, one less. So I'll put 12 here. Okay, and the present value I'm going to put is the right from the beginning, which was, here, and the future value will be this number. Okay, and then I'll just press enter. Sorry. And press enter. So it will give you a number here, which is going to be 13 point. So I've just, I think, made some error here. Okay. So I'll just redo it. So the formula which I use is here basically the same, the rate 12, and I put minus B2. Okay. So you have to put minus B2 to calculate the growth. The first number has to be negative and the second number has to be positive. So I think that I missed out here. So if I put minus here, I think you will get the number. So you're getting 13%. Okay. And you can just stop me wherever you're not understanding. Okay. And if you have any explanation, so you get the sales of the company is growing at 13.4% per annum. So it started with, a 7,000, and in 12 years, it has grown to 33,000. So that means the sales growth is 13.4%. Is that okay, everyone?
Yes, sir.
Okay. Now I'll just go back to this slide again. Okay. Then I'll go to Asian Paint because you have to get all the data loaded on the Asian Paint's, profit loss account and balance sheet. So I'll tell you how to do it later on. So just look at this company. Okay. The credit rating of the company is AAA. All the companies are rated AAA. Again, this is picked up from, the screener itself, where, you go to the documents and you will get the credit rating. Okay. So it's a AAA rating company. Okay, so all the companies have gone and collected. These companies are all good. All companies are AAA. So if you are investing in companies, so you think that you are risk averse and you want to put your money only in top rated companies of India, so you're going to put in your money in a AAA rated company. Suppose that is your outlook. Then what is the expected return you expect from these companies? So this is given the last table. So I'll tell you from where I have got it. So first of all, tell me which is the company which is giving the highest, return to the shareholders. Is it Asian Paint? Is it ITC, Sun Pharma, Larsen Tubro, Maruti? Just name them in order of three, the top three companies.
So Asian Paints, Maruti, and then Ultratech.
And then the Ultratech. Okay, fine. So these are the companies which are giving the returns. Now, how we have calculated the returns? Let's come back to this. Now, these returns are again coming from the screener itself. Okay. What I've done, I've just gone to the screener and they give you return. Okay. In the 10-year period, 5-year period, 3-year period, and 1-year period. Okay. Fine. So I have just made a graph out of it. Okay. You can make a graph for yourself. So look at Asian Paints. In the last, category of 10 years, 5 years, 3 years, and 1 year. So it is giving a return, okay, 23, 25, 26, and 23. Now look at the stocks of all the companies. Tell me which are the stocks which are consistently giving you a good return. The top company out of all these five. Name just one first.
Asian
Paint.
Paint.
Which is giving you a return in all categories, whether it's 10 years, 5 years, 3 years, 1 year, it is giving a return of almost at 25% on an average, isn't it? So that is the return which you can expect from Asian Paints if you are going to put money, okay? So which is 23%, which I put the last 10-year return here, okay? The last 10 years, how much? 23. So assuming a long-term mean return of Asian Paint is 23, so the average is 23. So I'm put the last 10-year number here. Now, which is the second best company according to you in terms of a steady returns? Of course, you can ignore a kind of a very small return because of COVID, which has affected some of the companies. Okay, of course, Asian Paint was a company which is not so much impacted, but there would be other companies which might be. Okay, so you can ignore that COVID impact and tell me, what would be the other company which will be good?
Sun Pharma.
Pharma.
Sun Pharma is, giving you a return of, if you look at 10-year, it is given 11%. So, you should be first looking at 10-year return. Okay. So Maruti Suzuki is
Maruti.
given you a 20%.
Maruti Suzuki.
Okay.
Yes,
So
sir.
over a long period, it is given 20% return. So My would be choice would be Maruti because it is giving 20%. And because of the COVID, it went down because there was a lockdown on Maruti plants, and now it has bounced back to 70% in 1 year. So it has bounced back to its original return. It's doing well now. If you know now, no, it should be much higher. Okay. So this is a figure which I had taken about a couple of months back. So the order would be Asian Paints number one, Maruti number two, and which will be the third company which you think is worth investing?
Sun Pharma
And
must be,
Pharma, sir.
and then Larsen and Toubro.
Yeah,
Also, Ultratech.
No, no. Larsen and
yeah,
Toubro must be the last.
yeah.
Ultratech, Sun Pharma.
Yeah, out of that too, you will just think that the company would you will look to because Sun Pharma is given 11% return or a long period, and Ultratech is given, sorry, I mean, which other companies say Ultratech? It's given 12%. But of course, the last year it has given a negative return. Okay, fine, because there would be some company specific reasons, though I identified what is the reason why it has given such a low return, but it has skipped from mine. But of course, if you want to see the companies which have done better is these three companies: Asian Paints, and of course, the ITC has given a staggering return of 46%, but on an average, it has given a very low return of 6%. Now, why the returns of ITC are very low over the last 10 years? Of course, it is.
So
Just
the
hold on.
ratings,
आकांक्षा मैं क्लास ले रहा हूँ अभी बात करता हूँ. हाँ, yeah. So, according to you,
As
what can be the reason? Yeah, why
as
the
ITC?
most
ratings.
the
Yeah,
most of
Akshay,
the
go ahead.
revenue of ITC come from cigarettes, tobacco industry,
Yeah.
and government has levied heavy taxes on that industry. That's
What's your
why the
name?
revenues
क्या
come
नाम है
down.
आपका? क्या नाम है?
Sir Akshay.
Akshay, you are absolutely right. Definitely, absolutely 100% right. You're doing CA, isn't it?
Yes, sir.
अच्छा अच्छा आप समझ गया. So exactly the valid explanation is that ITC is a regulated industry, okay, and the cigarettes are subject to heavy taxation, and the ITC has underperformed because people don't like companies which are regulated by the government, okay, so they don't generally fancy buying companies like ITC. It might have given 46% in the last year because of some reason of its own, okay, because they might be doing very good business in hotel and other things. And even cigarettes have bounced back, okay, after the COVID. So, they have reported a remarkable number this quarter. But overall, it's a company which is highly regulated because it's giving 6%. And you should always, step away from such companies investing most of the time, unless you find for a year or so they may gain. But equity is always a long-term investing, so you should always focus on the long term. So pharma companies are always good, but of course they are also getting affected by the stiff regulations from the FDA, from the American companies. They come and inspect the plants of these companies, and sometimes they report some kind of an event which is not to their liking, and these companies don't normally underperform. But pharma companies are always a good companies to invest, but barring the the FDA angle where their subject plants are subject to a lot of inspections by the regulatory authorities in America, because they are exporting all the drugs outside, and they look at whether they are infringing the patent laws or not. So this is very important. Okay. Then Larsen and Toubro, why this company is having a low return, 9%, according to you?
The nature of industry, sir, probably because the projects are having longer cycles.
Yeah.
So once you do the capex, you will have to wait longer for your return.
Absolutely. Yeah. That's a wonderful reason for that. And again, it's an old economy company. Of course, it's a barometer of the Indian economy because it is, tells how the economy is shaping up. The Larsen Toubro is basically a reflection of the Indian economy, but it's an old economy company. Mostly the companies which are in old economy sector, which are not retail facing, they always give you a lower return. Okay. Because all the FMCG company will find they are giving very great returns. The companies which are doing mostly e-commerce and other things, so those will be within limelight, whereas the companies like Tata Steel or JSW Steel or cement industries, they would be mostly underperforming. But of course, Ultrasec is basically one company which is doing very well over the last 10 years. It has given 12% return. Okay. Now coming back to enterprise value, हो गया, market value का आपने देख लिया. Okay, so now then the credit rating. Now we coming to the the main part. We go to Asian Paints again. Okay, Fine. So what I've done is basically I have gone and thoroughly analyzed the company. Okay, which you can also do. Fine. And if you want, you can, present as a project, a company analysis or a mutual fund analysis, whatever you want to do, it's up to you. So you can just put all the numbers on an Excel sheet, their operating expenses, and follow this template. So this is EBITDA. Okay. So basically, if you go to the screener of Asian Paints, okay, so you will go and go to the profit loss account. Of course, they are not given EBITDA, but they have given operating profit, which is nothing but the EBITDA itself. Okay, fine. So earning before interest, depreciation, and amortization. Okay, so I have just juggled the numbers and arrived the numbers according to my own understanding. So this is EBITDA, then EBITDA margin. So this is the operating margin the company earns. Okay, so margins are quite steady as you can see on Asian Paints. So it's roughly earning, close to about 17 to 18%. The margins had gone up in 1920. Okay, why the margins were very high in 1920 and now the margins have come down? Any reason specific to Asian Paints? Anybody can remember or anybody can think through?
Mainly
Asian.
because of petrol, crude oil increase.
Absolutely. What's your name?
Others, sir, others.
Adarsh, yeah, very well. Absolutely right. Because Asian Paints is using basically petroleum products, okay, to manufacture paint. So it goes as a raw material. So we found that during this period, the petrol prices have gone up, the crude price has gone up, so which has resulted in low margins for the company. Okay, but as the crude cools down, as it's cooling down, so company is expected to do well, and they can always pass on the prices to the customers if they happen to have an increase. Okay, so then we have the interest, depreciation, and other income, normal one, which I've included. So other income, you can just go to the site here, okay, and it will give you other income. Okay, now exceptional items and other income normal. So you can just segregate. Okay, other income will become part of your EBIT, as this site says. Okay, sometimes people say that all other income should not be included to calculate the EBIT, but since the screener has used it, so I have also used it. Okay, so I have segregated the other income separately so that my figure exactly matches with all the calculations which I've done. So other income, then EBIT. Okay, so other income is part of the EBIT. Okay, then exceptional items are shown here: EBIT, EBT, tax, then net income and share outstanding and EPS. So you'll get all the numbers here. Look at the EPS number. Find out the EPS is growing or it is declining. Tell me one. So this is the most important number for any shareholder to look at. If the earning per share is growing, all the PE ratios and are calculated using the market price divided by the EPS. So the valuation ratio itself talk of the EPS. So EPS is a very important number. Investors will always look at the EPS, how it is growing. So how it is growing? Is it growing?
Yes, sir.
Now, if
In
you want to
fact,
know, yeah, it is growing, yeah. So if you want to know how much it is growing, use the rate formula again, same kind. So it is growing at almost at 13% per annum, okay, which is a good growth, okay. So the stock is going to give you a return upwards 13% because the EPS itself is growing 13%, okay, fine, and it is also declaring some dividend over and above. So the return would be high, mostly above 15%, but it's giving around 23% because the future of the company is very good. So how do we know the future is good? So what I have done is I have just prepared this chart. Okay. Sorry. This is the projected one. Okay. Look at this. This is very important. Okay. These are the 3 years sales data which I picked up from the screener, which is the actual number. Okay. These are the projected numbers. I'll tell you from where I got the projection. Okay. Then this is the projected, the most important number would be looking is the EPS. So EPS is growing, okay, even in 2023, 2024, and 2025, okay. It is growing at 41% compared to 22, 26% compared to 24, and 12% in 25 compared to 24, okay. So roughly it is growing at 25% in the next 3 years. So the growth is 20. So when we calculate the PEG ratio, we need the growth. So growth is 25.79%. So PE divided by, so what is the PE? If you look at the PE ratio of the company, the PE ratio is how much? The PE ratio is very high, 80.6.
80.6.
Even if you divide this by 30, the PEG ratio is 8.30. Okay, they have taken only 10% growth. I don't know why, but they have used some different growth. So the company is very expensive today, very expensive. Okay, but if you look at the peers, they are also trading at a very high PEG ratio, okay? Because all the PE ratios of all the paint companies in India, they're touching rooftops. Asian Paint is actually consumer facing. Berger Paint is also consumer facing, and Narodak is also Asian Paints. But all these companies are also supplying to the industry, so that's why they command low PE ratios. Okay, they are selling their paints to automobile companies and other industries. So their PE ratios are still looking a little normal, but they also supply to the retail segment, so that's why their PE ratios are above 50. So altogether, the PE ratios, the median PE ratio is close to about 60 or 70. Okay, fine. So let's come back to Asian Paints. And let's come back to this number from where I have calculated. Okay. So this is, when you value a company, look at the P ratio of the company. It is, it's 97, but it's coming down because, the growth is very high. So people are buying today because they think that they command a very high P ratio. But if you look at forward P ratio, it is not as high as it is currently it looks to. Okay. So which justifies, buying Asian Paints because it would be trading 3 years down the line at a P ratio below 50, which is almost the industry PE ratio, isn't it? So now your question would be from where I got these numbers, okay? Now the number is basically coming from here, okay? So there's the site called Market Screener. So you can go to a site called Market Screener, which is a paid site, but it remains open for at least 10 minutes for you, free of cost, okay? So go to Market Screener. As I go, please press Market Screener and go to Market Screener and go to Asian Paints.
So it's currently on USA. So I believe you have to change it to India on the right hand side.
Asian Paints, okay. Asian Paints. Asian Paints. Now there are two things here very important. Okay, one is the financials. Go to financials and go below, and this is what the EPS it says, the sales and all. So do one thing, press this thing and press screenshot and take a screenshot, so it will get saved. Okay, then because you can see the EPS is growing here, so that's the number what I have taken from here. These are the 3 projected years, and these are the 3 actual years. Okay, so the company is growing in terms of earning per share, and this is the number we are always looking for whenever we are valuing the company. And the second thing, most important, is look for consensus. Okay, fine. So here basically you will find this company is tracked by how many people analysts. There are 37 analysts.
37 analysts.
Okay, so the mean consensus is that this stock is going to outperform. Okay, and the highest price people have given is 3,882, and the lowest price is 2,500. The highest price is likely to go up by 21% from the current price, and the lowest price will fall by 19%. So there are 13 people who are saying that buy it, 3 people are saying it outperform, and 12 hold. So almost from 37, 16 people are saying given a buying rating, 12 people are saying if you have the stock, hold it because it will give you a return. So that means it's a positive one. 5 people are saying it's underperformed. 4 people are saying it's going to sell. So now these ratings, they get upgraded every week. Okay, so and these numbers also get upgraded every week. So the company is being re-rated every week or every fortnight by the analyst. So these numbers get changed every week or every month, depending upon how fast the operators are doing it. Okay, so now coming back to the slide again. So Asian Paints. So what I have done is that I have put all the numbers and put the projected. Also, this is coming. This was in a separate sheet. Okay. So then I have tried to find. I've done even for the balance sheet also. So I put the balance sheet numbers also here. Okay. Then I've calculated some ratios like ROE, return on equity. Okay. Then return on capital employed. Okay. So we are coming to the end of the lecture. So I'm just hurriedly taking you through. So debt to equity ratio, how the company looks in terms of this is a company which doesn't have much debt. It has only 0.11 paisa per 1 rupee of equity, and interest coverage ratio is also phenomenal, very high, because it's been coming down a bit, but still at a very comfortable level. Okay, then book value of the company, market price to book value, so you can calculate all the ratios. Okay, it's trading currently at a book value of 21.64. Okay, so I'll share you all these slides, and you can also do a similar kind of a analysis for yourself. Okay, so we come almost to the end of the class. So anything you want to ask, anything which you have found was interesting, what have you learned? New something, Sai or anyone?
Yes, sir. Fundamentally, to rebalance my portfolio, what all can I do?
Okay, wonderful. So you're
And
maintaining a portfolio?
yes, sir.
Okay,
About 12 lakhs.
wonderful. So you have now got some insight tools, basically, to analyze companies and find out how they are doing and what will be the future by going to the market screener and capturing. I'll just close down the market screener because it will automatically vanish after some time. Okay, fine.
Sure, sir.
So anybody else?
Yes, once I
Yeah,
think
Sakshi.
we
Yeah,
got a
Sakshi. Yeah, yeah.
yes,
Sakshi, tell me.
like in general about bonds and how it works. I think it was a pretty interesting class.
Okay, very good, wonderful. So you have liked it, and you have got some new insights about the bonds and how they how the mutual funds
Yes.
concerning bonds. Okay, so that was good, wonderful. Anybody, Adarsh, आपको क्या अच्छा लगा? Akshay Khandelwal, you are there?
Yes, sir. So about the bonds and mutual funds, and also how to rebalance my portfolio as well.
Okay, so did you like the stock analysis? I mean, the how we can do analysis in terms of the company.
Yes, sir.
Okay, Divya, आपको क्या अच्छा लगा? What was the good about today's lecture? Prachi, anybody? Ridhima, Rupak,
Yes, sir.
Shivansh? Yeah, yeah.
Uh, so what I liked about is that what to look out, what exactly should we look out for the analysis part, finding out bonds. One such example was the new thing of which I learned was trainer ratio and difference between Sharpe ratio. So
Yeah, wonderful. So, have you read about Sharpe ratio and Trainer ratio in your previous lectures or semesters?
only Sharpe ratio.
Okay, fine. So now you have a clarity about, I mean, how these ratios work and which are better, and how to, look at, the real data and analyze, which one is doing, which bond or which stock or which share is better. Okay, is that
Yes, sir.
okay? Anybody else? प्राची, रिधिमा, रूपक, रूपक आपको कैसे लगा?
It's I mean it was nice, especially that Sharpe ratio part, trainer ratio, and this Jensen's alpha, and this part was
गुड गुड सो ये भी आपने पहले पढ़ा ही होगा मतलब अभी सेमेस्टर्स में आपको
yes,
बताया होगा
yeah,
जेंसन
yeah.
डिड यू heard about Jensen alpha in your earlier
And yeah,
semesters?
alpha I had heard about. I mean,
वही अल्फा जेंसन अल्फा इज
yeah,
सेम
that's right. This
इट्स
Sharpe
द
ratio,
सेम
Jensen alpha, that we had done before.
Okay, so the lecture as far as is closed. So now next week we are going to have presentations on Wednesday. Okay, so one more I mean theory class which I'll be taking offline, and Wednesday will be again an offline class which will be based on your projects. Okay, so you can choose any project you want. Okay, anything you want, whether an IPO, whether a foreign exchange, whether a mutual fund analysis, or whether a stock analysis. So whatever you want to do, you can do it in 1 week's time and make a small presentation. Okay, fine, in groups or individuals, whatever. Anything you want to ask? So what you can do is you can just download all the data regarding mutual funds and identify which are the best mutual funds if you are going to present that, or you can do it later on if you are presenting something else. Okay, fine. Is that clear to everyone?
Yes, sir.
Yes, sir.
Yes.
Yes, sir.
Yes,
Okay,
sir.
good. ठीक है चलिए. Just see you next week then. I'll be there in the the university. Okay, and now with regard to your paper, some people were saying that can I make a paper which can be taken home and can be done? Do you want take home or do you want to give it in the university exam?
Take home would be better, sir. Final exam, right?
Okay, so where is my friend Sai? Are you there?
Yes, sir.
Sai?
Yes,
हाँ
sir.
ये टेक होम में क्या होता है मतलब when you have you got some take home in papers also earlier in MBA?
Yeah, we do. I
Yes, sir.
mean,
A lot of, sir.
Okay, so how it is done basically? The paper is given to you. I mean, how it is? What is the process basically?
So generally, it's like a case study. So, for example, if you give us a case study and you give us certain questions, so we get a day for it, and then we go back and we work on the case study, and then the next day, like maybe like 12 or something, then we're supposed to submit you the answers.
Okay, so that means I have to make a case study paper. So there will be a case study on an IPO as well as a case study on mutual funds. So I'll make a paper which will have two case studies. Okay, each carrying 20 marks. Okay, fine. So there will be a 40 mark paper. So you have two case studies. Okay, so you have to compulsorily do both the questions and solve it and submit your, and how do you submit your replies? Directly to the faculty or to the examination center?
Directly
Faculty.
to the faculty.
To the faculty.
Okay, so then I'll make a paper which will have case studies on three topics. One will be forex, one will be the IPO or the ICDR, and another will be based on the mutual funds that we have done. Okay, so I'll just prepare a paper which will carry three case studies, and you have to do any two out of them. Okay, is it
Sure.
okay?
Yes, sir.
That would
Yes,
be fine, sir. Yeah. Perfect.
So making a regular paper is very easy, but making a case study becomes a tougher job. So you have actually increased my job, but you have got comfort that you will be doing your paper at home. Okay, fine.
Sure.
ठीक है चलो चलो see you then next
Okay,
week.
thank you,
Okay,
sir. See you.
bye.
Thank you,
Thank
sir.
you, sir.
Thank you, sir.
Okay, 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 bye. Thank you.